The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. You have markets in the red to kick things off. Following the bank earnings that began last week, we got some bank earnings this morning. We have some retail sales this morning to go over. You have markets slightly in the red. You see the action last night. Up to 45.65 at about 3 o'clock, and boom, quite a sell-off of about 15 points into the close last night. We chop around all morning till we get those retail sales at about 8:30. A little bit less than the market was looking for, but a pretty resilient consumer in the U.S., man. We'll go over those numbers in a moment, but nonetheless, S&P's negative by 5. You get the NASDAQ 100 negative by 31 right now, the Dow off by 20, and the Russell off by 2. All of them pretty close to flat, right? In the context of the run these markets have been making, all the indices off between about 1/10 and 2/10% in the red. Bitcoin off $185. We're under 30,000. You got crude up 18 pennies, 74.24. Look at how crude's jumping around on that $74 price mark. 74.24. The price of crude. You get the dollar catching a bid. Dollar up $15. We'll call it to 19.71. You jump to notes and bonds. There's some volatility on that retail sales number, right? You get a spike. In both directions, we're a little bit lower in price off that number. Right now, you got the 10-year up 5 ticks. We take a look on a daily. It's been quite a run, man, in terms of higher price and lower yield in the 10-year right now. We jump over to the dollar index on the daily. Now, as I mentioned yesterday in my program, not sure what's going on in these bars because that's not how the action has went on these days. Not sure why it's showing all of these hammers to the bottom. But nonetheless, we're trading under 100 right now. We put it back on a 30-minute, and those should be like full-body red candles, right? If you know how candles work, right? Those should be full-body red candles. Not sure if anybody knows why that's going on the Thinkorswim platform. But nonetheless, we got lower price on the dollar. That correlates to lower yield. And what do we have? We got a weaker dollar, we got lower yields, and we got a positive market. All the markets somewhat flat today as we come into the opening bell on Tuesday. We jump over to the VIX. Volatility index, 1361. The market very comfortable under 14 right now as we march forward to earnings season. And yeah, just for some context, right? You back it up to a 3-year weekly. Now, what's important here is that we don't even hit. Time is amazing, folks, okay? Absolutely amazing. Yeah, it's 1, 2. I mean, I have to do it in my own head. 1, 2, 3. We are more than 3 years out past COVID. Crazy. How does that happen? 1, 2, 3. Yeah, it's true. We come into COVID, right, in February of 2020. Point being, we're at some lower levels, man, as we're coming out of a Fed hiking cycle. And let's get into the economic data this morning. We'll talk about retail sales. Retail sales rise 0.2% in June. You had a May revision to 0.5%, up from 0.3%, I believe. Yes, there it is. May's increase was revised up to 0.5 from an earlier reading of 0.3. You have retail sales coming in at 0.2 for the month of June after strong increases in May and April. I believe the expectation was for 0.3%, missing Wall Street estimates. Those estimates were for 0.5%. Okay, sales excluding auto and gas increased 0.3% in line with estimates. So if you knock out autos and gas, it was right in line with estimates. And May sales, as I talked about, revised up to 0.5%. 7 of the 13 categories highlighted in the release saw increases from a month ago. Furniture and home furniture stores, 1.4%, while electronics and appliance stores, 1.1%. Growth at non-store retailers, which includes online, helped keep total sales higher than the month prior with a 1.9% increase from May. Wonder how Prime Day? No, Prime Day wasn't even in there. That would be in July. Sales at gasoline stations led the laggards, falling 1.4% from the month prior. Now, these numbers are not adjusted for inflation. Okay, so keep that in mind. Yeah, retail sales are not adjusted for inflation and reflect price differences as well as purchase amounts. Okay, So not necessarily indicative of a stronger demand for a greater amount of products, but nonetheless, higher numbers than we're dealing with, continuing to rise. And on the heels of that, we got a pretty calm market, all things considered. S&P down about 5 right now, back to a 10-minute chart. You see the volatility. S&P is basically back to where you were at 1 o'clock yesterday. And keep your eye on the dollar and keep your eye on yields, folks. Okay, the 10-year just chopping around. They take those numbers pretty much in stride right now. And you jump over the dollar index takes it pretty much in stride as well. We got a little bit of a spike there, but we're trading right now at 99.85. No, not bad. All right, what else we got pulled up? So retail sales was the big number this morning, but we got some bank earnings coming out as well. Let's jump over to Morgan Stanley. Their deal-making and trading businesses dent their earnings. Trading revenue slides 22% from last year's volatile period. Record wealth management revenue helps cushion the blow. Yeah, to get down to those numbers, $308 million in severance costs tied to the 3,000 jobs they eliminated, okay? Profit fell 13% to $2.18 billion was the number there. Yeah, and they have a new long-term goal of more than $12 billion in pre-tax earnings will come from a mix of asset growth, more lending, and expanding markets. The unit, which has benefited from higher net interest income this year as a result of rising rates, was at $6.66 billion. Watch out for that number, man, up 16%. They got $100 billion in inflows, $90 billion in its wealth unit. They kept it on track for its ambitious target of sopping up $1 trillion in new assets every 3 years. Quite a goal, man, that they got. Fixed income trading business, $1.72 billion, just shy of the $2 billion they were looking for. Equity fell 14% to $2.55, primarily driven by declines in cash and derivative products on lower client activity, see that, and lower volatility in the markets. So nonetheless, though, you jump over Morgan Stanley. I was going to say trading lower. They're catching a little bit of a bid off of those lows, and you're actually slightly in the positive right now by about 37 cents. We also get Bank of America with their numbers. They're a little bit higher this morning after a spike down to 29. We're trading at 29.75 from 29.40. Bank of America with their numbers, tops analyst expectations amid higher interest rates. Yeah. 88 cents a share versus 84. Revenue, $25.33 billion versus 25.05 of the numbers there. Yeah, $7.41 billion in earnings in 90 days. Not bad, man. Fixed income jumped 18%. They beat on fixed income. Equities trading slipped a bit, but they beat as well. Yeah, so strong numbers for Bank of America, I think, especially when you compare it to Morgan Stanley. BAC. Yeah, up a bit. Morgan Stanley, well off that spike high. We also got PNC with their numbers. Was that last night? Or was that this morning? Either way, PNC down about $3, jumping over to that headline as we jump around. Kicks off regional bank earnings by slashing their guidance. They cut its forecast for the first quarter of 2023 as well. And $3.36 a share, higher than the market was looking for, of $3.27. And like they call this is a super regional. All right, 7th largest U.S. bank overall, 7th largest. So not exactly a small regional bank. $556 billion in assets. Yeah, they trimmed their full-year guidance for a further time this year. Be interesting to see how these banks trade today. We got some retail sales. We'll be back to talk about it all with our man Kevin Hinks. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps off by about 5 points right now. NASDAQ 100 slightly in the red by 29. You get the Dow off by 34. To talk about some of the action this morning, let's jump over to our man Kevin Hinks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, Fast Market with your host, Kevin Hinks, Tom White, the outstanding team. They got a bunch of great guests. They walk you through hypothetical trade setups, folks. It's a great time of year as we're coming into some awesome earnings. And let's jump right into it. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Yep, it's interesting. We're getting into earnings season, but we're about to put our foot on the gas pedal for earnings season, right? We're kind of at the end of airlines and financials, and we're transitioning into more high-cap tech, right? When we get Netflix and Tesla. So I expect the pace to pick up a little bit here pretty soon. You know, we got Bank of America out this morning. We got Morgan Stanley out this morning. Kind of similar, frankly, to, you know, some of the other financials that we've gotten out. A little bit different, but similar to the same. So stocks are, you know, the reactions are a little bit muted to start the day. But, boy, Tommy, I expect the pace and the acceleration of earnings to pick up real quick, starting with Netflix and Tesla. And I expect a lot of the discussion to be, look how far they've come this year, but look how far they are still from the all-time highs, Tommy.
It's a great summation of some of the action going on this morning. I was jumping around to some of those equities, Kevin, as you were talking about it. I'm not sure what they're saying on the Bank of America earnings call, but it seems to be going well. It's up almost $1 from where it was at about 8:45 in the morning when they began that call at about 8:30. Looking at it, I hear you talking about sometimes pulling up those minute charts on the Thinkorswim platform, man. That's what I got up there on Bank of America right now. You referenced Netflix, though. So we get Netflix, as you mentioned. We get Disney, Kevin, on, we get Netflix and Tesla on Wednesday. You mentioned the run Netflix has had. What do you think of the conversation right now? Because, you know, I found myself, it's just remarkable, like you mentioned. I have it up, Netflix, on the Thinkorswim platform, going back a few years, a low of 162. We're at 450. And you compare that to a company like Disney. We know they have more business going on there in terms of parks, but pretty remarkable. Disney almost coming into lows in the last few years, and Netflix charges higher. And then we have the strike going on, Kevin, with the writers and the actors. Give us a little teaser maybe of what you think of Netflix, and then maybe what you think of Disney as well, because I'm looking at the two of them, and it's just crazy the run Netflix has had. Disney can't find a bid right now.
Yeah, well, the good news is for when you compare Netflix to Disney is Netflix is the clear streaming winner, right? Take all the other ones and put them in a pile. They're all struggling to be profitable. Netflix is profitable. They've already gotten through that. They're the leader in that group. Now, the good news for Disney is they have a bunch of other segments of their company that are extremely profitable and carrying streaming. But, Tommy, I think the cautionary tale here, look at these names. Look at how hot they were a year and a half, 2 years ago, when streaming was all the forefront. And take out streaming and put in AI, Tommy. And so you look at what is hot right now, what is overinflated. I think AI is overinflated, and they're trying to figure out, the competition's going to get involved. I think competition has affected these streaming companies a lot, but they're struggling. And, you see what Bob Iger at Disney is doing to cut and slash expenses to get these numbers down. Not really surprising that it's happening. So when you look to Netflix, they're sure, of course, the strikes are going to affect Netflix's ability to put out content. But, Netflix has other content. And, they've got the new advertising part. They've got the password crackdown that they've got good stories on. So there's a lot of good news coming out of Netflix. Now, that doesn't mean the stock's going up. I have no idea. It depends what they report and how they map out the rest of the year. I think guidance is going to be critical here, especially when you see these names, how far they've run. So, yeah, I think, hype is important. Stocks get overbought. Stocks get oversold. You've got to be nimble and risk defined in these trades, Tommy. It's what we do. It's what we watch every day. Do I know where they're going? Of course I don't.
Risk defined, man. That's part of the reason I watch your program, Kevin, because I live that mantra as well, partly because I've been watching your program for so many years. You mentioned AI. It'd be interesting to see how those contract talks go with so much at stake with AI, whether this becomes one of those pivotal holdouts or maybe they do something short term. Just kind of interesting in terms of where AI is going. They're talking about in the Tiger's Den, Kevin, saying who needs actors, man, in the future when AI can just create everything. Going to be interesting to see where the forefront goes. You mentioned AI, though. What do you think about NVIDIA? I want to jump to for a second, Kevin. Haven't talked to you since last Thursday. We talked to you every Tuesday, Wednesday, Thursday. Friday's action, man. My dad was on this program saying $30 NVIDIA almost traded down on the action on Friday. We've gotten back almost $17 of that at $467. You mentioned we might be a little bit overbought. I know there's probably traders that we have in the den right now who are looking at this equity, potentially thinking about a short play like you're talking about. I'm sure there's people loading up looking for the upside. But if they have a bearish bias, Kevin, is this something you're looking to trade to the downside? Is volatility in this equity even too high when it's pushing $30 a day? How do you look at a stock like NVIDIA? Do you do that? It was quite a day on Friday, which is why I wanted to ask you for $30, man. You talk about some volatility.
Yeah, it's funny. I was reading an article that put out an unbelievably rosy picture of NVIDIA, their ability to grow, their ability to dominate AI, all the great things they're doing. And then he said, however, all that leads me to a target price or a valuation of $240 a share.
Wild.
So think about that. So as good of a picture as it is it's got an unbelievably high valuation right now, and eventually that's got to come into line one way or another, Tommy. When and from what level, I have no idea.
You look at some of those PE ratios under the Analyze tab and the fundamentals, hundreds and hundreds. We'll put it that way, folks, whatever you're looking at. Kevin, with that in mind, you referenced some of what you guys may be talking about on the program as we're coming into some top names this week to kick off earnings season. Do you guys have a menu of what you'll be talking about at Fast Market at 12 today?
We do, Tommy. We'll trade Goldman Sachs and United Airlines today. Like I said, financials and airlines is what we start out earnings season with. And then, like Folio is going to do a presentation on Carvana. So we'll take a look at Carvana and everything they have going. And is this company sustainable, frankly? So we'll take a look at those three names today.
Carvana, quite a run off of the lows, quite a collapse from the highs, as we all know. Kevin, I appreciate the time on a busy morning as always, man. We'll be watching at 12 o'clock today, and I look forward to talking to you tomorrow, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, check it out. They're going to be talking about United. They're talking Goldman Sachs, and they're talking Carvana. And yeah, we were talking a little bit of Carvana yesterday, man. This thing, quite a collapse, quite a run from the lows of $3 and change last year. But as I mentioned, right, the article I was talking about yesterday, what were they talking about? The creditors coming together to make sure that they were on the same side, and potentially the founders and the family running it, just making sure that they were doing what was right, and making sure none of the assets in that company got taken out of that company if there was a fire sale under bankruptcy. There's a lot going on, man. I'm going to check out that program. Fast Market, they'll be talking about it today at 12. Defined risk, folks. Check out the program. Every trade they line up has defined risk in their example trades. Stay tuned. We'll come back for the open, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P down about 4 points. NASDAQ 100 off 38. We get the Dow off 40. Russell in the positive by 2 as we get some regional banks coming out with their numbers this morning. PNC is out. We have Bank of America out. Morgan Stanley out. Goldman Sachs out tomorrow. We also get, as Kevin mentioned, right, Netflix coming out tomorrow. We get Tesla coming out with their numbers tomorrow as the market slides a bit on the open to negative territory. Tesla dipping a bit, off about 0.5%. You jump over to Apple shares. They give up about 0.5% as well. Microsoft got a little negative action in the market right now, off 0.25%. Excuse me, you jump over to Meta shares. They're slightly in the positive. Nvidia shares off about 0.1%. Yeah, be careful of the valuations, man, of some of these equities, right? We've talked about it even with Apple and with Microsoft. You take a look at the run of these things. I mean, folks, for a company with so many shares outstanding, it has been a remarkable year for Apple as they have added $1 trillion in market cap. Yeah, what are we at? We're at over that, man. We are at about $70 added. 1.12 trillion we're at right now, because we're at $70 added, and the company has 16 billion shares outstanding. It's bonkers numbers, to put it lightly. You jump over to Microsoft. Microsoft right now is on a one-way tear to the tune of $125 to the upside. You jump over to Microsoft shares, you jump to the fundamentals. This company has 7.5 billion shares outstanding. 7.5 billion shares, and you're at 125 now. What is that? That's getting close, man. $937 billion in market cap Microsoft has added. So there is a lot of optimism built into this market, to put it lightly. How about the telecom stocks yesterday, man? They're catching a bid today. Wonder if that's a dead cat bounce. These things have been in trouble, man. Not sure what the deal is. You know, my mom had a lot of shares of Verizon because she worked for it. Thankfully, you know, didn't take all of this down, man, as in diversified a while back, because something is going on with these stocks, man. I don't know if, you know, their airwaves aren't going to be as needed as they once were, but you get a double whammy with the story from the Journal yesterday talking about lead. America is wrapped in million miles of toxic lead cables. That'll get your shares going to the downside. So this was the article from Journal yesterday, I believe. AT&T, Verizon, and other telecom giants have left behind a sprawling network of cables covered in toxic lead that stretches across the U.S., under the water, in the soil, and on poles overhead. Whew. As the lead degrades, it is ending up in places where Americans live, work, and play. And yeah, we've spent decades eradicating lead from well-known sources such as paint, gas, and pipes. And the Journal's investigation reveals a hidden source of contamination that hasn't been addressed by the companies or environmental regulators. Why is the Journal discovering this versus, like, you know, our regulators and government? Now, that is the story yesterday. This is the story going over it from the Journal today. That lead cables will be a dead weight for telecom carriers, face potentially huge liability as other market forces drag, right? They're already facing a lot of headwinds, man. This is just going to be hanging over there, and it's probably going to be hanging for a while. That's the part that's really all I know. Nobody knows what's going to happen. It's going to be hanging out there for a while. They all traded down dramatically yesterday. They've been performing this year dramatically lower. I mean, look at the divergence from where we were in April and May. So in a series of reports last week, the Journal investigation detailed the risk from copper cables sheathed in lead and the remnants of the old Ma Bell network. Such cables fell out of use in the 60s as far as new installations go, but an unquantified number still sit under the water, in the soil, and on the poles overhead. So you're talking about now almost 60 years is how long they've been down there. Yeah, they're probably all degrading, right? This is the time that it really matters. We've not seen, nor have regulators identified, evidence that legacy lead sheath cables are a leading cause of lead exposure or the cause of a public health issue. Okay, so they haven't identified that. I'm getting down to the point they talk about it, but they talk about basically that yeah, they don't know what the financial risk is going to be, okay? And I'm jumping around articles here. But they literally went around and tested this stuff. They knew about it and did little, okay? There's some hallmarks here that lawyers are probably smiling a little bit extra this morning, you know, or when they read these things saying, man, they knew about it. They know it's going to be bad. They're all over the place. They're all over the soil. Yeah, the range of outcomes could range from nothing to billions, and I would say billions and billions of dollars in damages, folks, okay? If you discover that these things are just pushing lead all over the country, yeah, and I'll find it at the next break, man, in terms of what they're talking about, because I was reading one part that they went around and tested Okay, here, this is the line I was looking for. So the journal's investigation found evidence of more than 2,000 such cables, but stressed there could be many more. The investigation also found elevated levels of lead in soil samples near known cable sites. So you got elevated lead levels near the cable sites. They knew about it. We know lead is horrible. I mean, folks, I have a rental house, okay, my duplex. It's built in should know it. I think I did 1947 maybe. I'll pull it up. Yeah, so there was lead at one point used in something. And so because of that, I have to disclose that and provide anybody that lives there with a pamphlet informing them of the risks of that existing. Now, if you're unaware, folks, if you have lead paint or something like that, it's really only hazardous when it gets disturbed. Well, guess what? Going into the soil is a way of it to get disturbed, as in for it to get consumed, man. It's pretty lofty when you look at the implications that it could have. And it's all going to come down, of course, did they know about it, right? How much did they know? But that's going to be a battle forever, man. And that's going to weigh on those equities. They're getting a bounce today. But even before then, they got some problems in terms of what they're dealing with. And now this is just going to be an extra one hanging over their heads. All right, what else do we talk about here? We're going to jump through. We got a bunch of stuff. So let's just jump through a few of them. Schwab, bank deposits slip as the firm seeks to recover from a crisis. Firm's deposits fell 7% in the second quarter from the prior period. Customer deposits dropped to $304 billion. The average estimate, though, $298, so they beat the estimates. We jump over to their shares. Schwab, up 12%. How about that one for you, man? You talk about an acceleration, right? Look at that run. Now, was that their earnings call starting or the acceleration there? Because this thing just ran from 58 to 65. It says they came out with their numbers a little bit before then. So it looks like the fact that their deposits came in at 304, the market was looking for 298. Everybody's worried for a run on the bank right now in some of those equities, man. You take a look. So this thing's at 65 bucks right now. Yeah, we were at 80 before the March banking crisis, got to lows in the 40s, and just like that, we're at 65. Market finds a bid. Dow up 55. S&P's only negative by 2. Stay tuned, folks. We got a lot more to go over this morning. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe
to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Give it some time. You got markets in positive territory. S&P's up by 1, Dow up by 86. How about the Russell charging higher by 0.6%? NASDAQ 100, though? Nah, not quite getting it done right now. Yeah, and as Dudette says in the den, someone's cleaning the decks on the Magnificent Seven. I was jumping around. Pretty interesting that you got markets in positive territory, and then you look at the sell-off on some of these equities, right? Apple trades lower right on the open. It's negative by 0.5%. Microsoft trades lower, negative by about 0.5% on the open. Tesla shares trades lower on the open, down by about 0.6%. Google shares down by 0.8% right now. NVIDIA shares down by 0.9%. Meta down by 0.2%. Pretty remarkable as you got S&P's, Dow, Russell in positive territory, and you only have the NASDAQ 100 off by 0.4% right now, with all the leaders kind of at or more than a 0.4% in the red number. All right, let's jump to see how we're doing on notes and bonds. Just chopping around right now. There's your 10-year action. You jump over to the dollar index. You got to keep your eye on the dollar index and notes and bonds, man. Dollar index chopping around as well. 99.86 right now. And yeah, let's talk a little bit of Twitter. Let's talk a little bit of Kathy Wood. So she writes down Twitter stake by 47%. We take fair valuation very seriously and absolutely have had to write that Twitter down. It's going to be a Harvard Business School study, right? It's a private company, Twitter is, but you see how it gets impacted by investors, of course. She is still bullish on Twitter's long-term outlook. I don't know, man. It was the forefront leader, and it's no longer the forefront leader. And it's remarkable when you see a company like that. And you saw, what was the movie about Facebook, right? I forget the movie, what the name was. But there was one scene where, when they were first starting the movie, Zuckerberg's partner, was it Dustin Moskowitz, Social Network? Thank you, Duffy. That he was kind of funding some of the early ventures. And at one point, he didn't pay the bill, and things shut down. And Zuckerberg freaked out because in one essence, you could lose everything, right? You could lose absolutely everything. He knew, Zuckerberg in that movie, I remember that part, that he knew if they went down for a minute, the damage that could be done by losing those users, that they may never come back. They may experience another network that'll eat into their user base, whatever it is. It's kind of what's going on here, and how fragile things can be when you're that much of a leader, and when you don't really have anything that special, but you have everything all at once. As in, Twitter is a phenomenal business idea from Jack Dorsey, okay, but it's very simplistic in its nature, that you have an internet site that you can post text onto, and pictures, and now videos, and now they have spaces and all that stuff. The point being, Facebook can do that business, man. They're already doing it, right? There's all these other areas that are coming in, whether it's Matador, what's the one that Dorsey has now? He's got another one going on there. Very hard to imagine that company going back to the forefront with so much competition that was not quite there at one time. And yeah, is the next generation going to be using TikTok or Twitter or Instagram or Threads? Nonetheless, that gets written down by 47%. I would guess it probably might even be worse than that. All right, you talk about student loans, right? We've been talking about this, man. So this was out there on Friday, but just talking about it. Yeah, how about a 5% pay cut, man? What would you do if 27 million people got a 5% pay cut instantly in the non-farm payroll numbers or something to that degree? That's what's coming, man. Typical monthly loan payment. Now, these begin October 1st, I believe. Some 37 million borrowers have saved about $200 billion from the pause on payments as of April of 22. That's as of April of 2022, okay? But this one's coming, so pay attention to it. Just keep it on your radar. You're going to see articles written about it, rightfully so, because the impact is going to be dramatic, man. I mean, look at this. Is one woman has $552 a month, man. Yeah, let alone the kicker of this sentence is that cereal's $7.99. What cereal's $7.99? I buy cereal sometimes for the kids, folks. I don't think it's $8 yet. Maybe I'm not shocking, and that's even at Publix. Let me give you some advice. If you're paying $8 for cereal, folks, you're overpaying, and you're overpaying for what is usually a pretty unhealthy breakfast. I don't know how Americans got convinced to eat processed carbs in the form of cereal with some milk, sugary milk on top for their breakfast. Doesn't happen in many other parts of the world. Doesn't happen in Europe. And eat some eggs, eat some meat. Yeah, that's my diet preach. But nonetheless, man, this may be the canary in the coal mine in terms of what's going to come. Maybe the Fed knows this is coming too. Maybe that's part of the lag. Yeah, there you go. Some oats or some eggs. Listen, oats are probably the healthiest thing you can eat, man. You see these people who are all health and fitness. They eat oats in the morning. They're just like almost too delicious for me. I eat too many of them, to that degree. All right, this is another interesting one if you haven't seen. Not sure how it's going to impact the economy, but boy, it's interesting how it's going to play out with high-earning retirement savers. So you're going to lose some of your 401k tax break, right? But I feel like this, and tell me if I'm wrong here. Agree, Jim. Very tough to find a healthy cereal, man, that's not flavored with sugars. I tell you what, man, having a young kid in the household and really becoming hyper aware, we're going all over the place here, of added sugars, okay? That's where I'm most obsessed with keeping them out of his diet if possible, all right? And it's almost impossible completely, but added sugars, okay? There are added sugars in everything, man. Every single thing you eat practically, not everything, all right, but has added sugars. I mean, even something as healthy as Chobani yogurt, right? Chobani gets a great rep. Greek yogurt, one of the healthier things you can eat for yourselves, folks, has a lot of protein, has some good enzymes for your gut, right? A lot of good stuff like that. Greek yogurt, Chobani, they got like 15, 16 grams of added sugar in some of those things. Now, you're always going to get some sugar if you have fruit in there, folks. But added sugar, it's just remarkable how they're everywhere. Cereal especially, man. Yeah. So back to the 401k. What's going to happen here is if you're a high earner making more than $145,000, okay, catch-up contributions are going to have to be done after taxes as in a Roth IRA. What's so interesting here is that is actually probably a better decision for many high earners to make anyway, because they're high earners, so they're going to have a high net worth. So many people, what you do is, right, you put your money into your 401k, you take that tax break now, it decreases your tax burden now when you're earning a lot of money. And then when you take that money out of your 401k, you'll be in retirement, you won't be earning as much because hopefully you'll be relaxing, not working. And so you have a lower income bracket as you take that money out of your 401k. Well, that's the case sometimes, but if you have a lot of money and you're making a lot of money from your investments, you're making a lot of your money from, maybe you're still earning money from a business, whatever it is, you're a high earner, you're still earning money. This is going to push people who make $145,000, okay? Starting next year, those catch-up funds will be funneled only into after-tax Roth accounts for those who earn more than $145,000 the previous year. The change is part of new rules Congress passed in December, okay? So if you're making more than $145,000 a year, and if you're doing anything in regards to catch-up contributions, which is ages 50 and older, we'll continue this when we get back, man. It might make sense to have a Roth anyway. Maybe this will give you that nudge.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. A little bit of a sell-off of the NASDAQ 100, right? We went over those magnificent 7. Yeah, NASDAQ 100 off about 0.5%. Everything else in the green. You got the S&Ps barely in the positive by 2 points right now. The Dow up by 0.4 right now. Russell up by more than 8%. Look at that run. All right, let's check it out. PNC, man, you get it all back. Down to 123. You're back to 128. You jump to Morgan Stanley. Look at that thing, man. Up 4.6% from Morgan Stanley. Bank of America up 3.4%. Yeah, Goldman Sachs out with their numbers tomorrow, but they're up 2% with the rest of the banks out there. Wells Fargo up 1%. JP Morgan basically flat after their acceleration last week to higher prices. Pretty remarkable. Jumping back to that story. So, again, this is talking about catch-up contributions, okay, is going to have to be done after taxes for those that make more than $145,000. Now, this is a way for high earners to cut, of course, how much tax they're paying. You make a catch-up contribution. That $7,500 catch-up contribution, if you're over the age of 50, gets taken off your taxes. If you're in a 35% bracket, that's $2,600 you save. If you're in a 22% bracket, that's $1,600 you save. So you can see how when you're in the higher echelon, you're saving even more by making that same contribution for a catch-up. And what they talk about here is that the new requirement, okay, and this is talking about who? Ed Slott, an advisor that specializes in retirement accounts. Not sure, but either way, I agree with what he's talking about here, which is interesting. This is what they passed. They force people to do it. And it's a gift to high earners who might otherwise overlook the benefits of a tax-free growth, okay? Roths grow tax-free. They're better options for big savers than taxable brokerage accounts because you don't have to pay taxes on dividends, interest, and any capital gains that happen over time. And that even applies to your heirs who receive tax-free income from that Roth. And they must be liquidated over 10 years by most non-spouse beneficiaries. Still got 10 years on there. So pretty remarkable. They're basically going to force people to open up tax-exempt accounts going forward. They're going to make them pay those taxes up front. But in the long run, they're probably going to make out. Pretty remarkable, right? What's that mean, though? That means we probably don't make out as the country collecting taxes somehow. Interesting nonetheless. Maybe some of you will deal with that on earnings coming up for tax season next year. Thanks for starting your day with me, folks. Stay tuned. Basil's up next.